So 1st of May 2019, Wednesday evening, we are back with yet another weekly session for our mentorship traders community. It's been a holiday. It's a truncated week. And we have an end of the month as well. So this time I will extend our market analysis by a few more minutes by talking about the monthly scenario, the long-term scenario. All right. So what do we have on our daily time frame? This is the Nifty Futures daily chart. Is essentially a range-bound market. There was some degree of volatility in the last trading session, open week, but did manage to bounce back, and this bounce back will be far more clearer if we take a look at the intraday charts. This is the 15-minute chart, and we can clearly see that this is the zone from where we see the support coming in, which is on the daily chart is this zone, which is essentially this gap up. So it's supported by a nice 11,500, 600 range. This is important. And it's capped by, on the upside, 11,008, 850. And you can extend it another 50, 100 points to psychological 12K mark. Our indicators suggest that we are still in an uptrend with a dropping momentum. We don't have any signs of topping out through divergences on the daily chart. Range bound close to the upper border, so we can expect some amount of ease off. If you look at one time frame lower, and which we do by going into the 75-minute charts, we also do see a micro consolidation over here, which is supported by Tuesday's low, which is close to that 11,712 mark over here. So 11,700 is the short-term support to look at. Over here, the trend is up. The momentum has started to improve. We have a shoot in our hands. So not much probably on the upside. 11,840, 11,850 are the highs. On the downside, 11,700 will mean that this big, long negative bar will have follow-through selling only below the low of this particular 75-minute bar. The 15-minute charts have a short-term bounce back. The indicators have gone overbought. The good thing is that even in 15-minute chart, we have moved into an uptrend with improving momentum. So we have a bounce back. We have the market stuck in a range. We are towards the upper border of the range. We can expect a breakout. The trend is much more easier to follow than to reverse. From a short-term point of view, last trading session, which was Tuesday's low of 11,700, can only lead to a further fall of close to that 11,550, 500 mark. As long as 11,700 holds, which is Tuesday's low, I believe that this momentum is likely to stay on the upside. Strategically, as traders, because we are in an uptrend in all time frames, the daily, the time frame -1 as well as time frame -2, which is the 15-minute chart, we should look to implement swing trades, swing long trades, once the market decides to ease off a little bit. It's been an end of the month. So this is April. We had a range contraction. We had a decent range contraction over here on the monthly chart. Uptrend, rising momentum. Indicators, of course, in this kind of a chart will definitely go overbought. There's no doubt about it. I'm changing it to the line chart just to check that if there's any form of an intermediate divergence shaping up, which is there, but it's an intermediate divergence with a count of close to 7, 8. Monthly lows comes to around 11,573, which is again that 11,550, 500 mark. So we know that 11,700 and then 11,500 are the important levels. So below last month's low, the market can slip down, but the trend is up. The momentum is positive. It's kind of a rising channel kind of a behavior in the price that I can see. I'm not a big fan of pattern trading, you know, but it's not taking the shape of a wedge or anything like that, but some kind of a channel. So, and it's going towards the upper border of the channel, and it's a rising channel. So it will be interesting to keep a watch. I think in this kind of a rising channel, breakout on the upsides generally see some kind of throwback. So I'll suggest that don't chase breakouts from here on. I think swing trading would be a much better opportunity to get into. All right, but the good thing is the monthly charts are strong. The intermediate charts are also strong. There's no sign of divergence yet, so we should not create any biases right now, and we should continue to stay bullish in the market. Let's look at the Bank Nifty on top-down approach. And okay, there you go. We've got a 2% dip on the Bank Nifty. The Bank uptrend, rising momentum, no doubt. We have a consolidation of the big move. So in March, a deteriorating momentum scenario for quite a few days. Swing opportunities, couple of them. No big threat. Previous supports, previous lows, which is close to that 29,200, 300 mark as supports. Not a chart where you should be overly bullish. Neither is the chart where you should be overly bearish. The trend is up. The momentum has been I would rather do it on the 75-minute chart first. Nothing much. It's stuck in a range. So we need a breakout. We need a breakout or a breakdown. Not overly bearish. Neither am I overly bullish. The long-term trends are very healthy. So I would continue to keep my bias on the positive side. Not much. We'll take up the questions and all the trades that you have done. I have a couple of trades to share with you. A classic trade on the Nifty Future 5-minute chart, which I'll share with you, and also did a sample trade on Dr. Reddy's swing trade. These are the two trades I'll share with you, and of course, we'll take up each and every doubt and trades from your side.